Howard, I was a little surprised yesterday. I mean, I get a certain amount of feedback on certain tweets, but I made a simple tweet. I said, this is way worse than the .bomb bubble imploding, just by virtue of capital lost. I mean, I guess people just don't understand like the amount of market cap that's been eviscerated right now across crypto and equity combined relative to the dot bomb bubble. I mean, I think it's a pretty simple one. What do you think?
I lived through the dot bomb bubble, so I have a perspective on that, frankly. And, my 2 cents on all that is, it's hard for people who have experienced, a 10, 12-year bull market. When they see these kind of drawdowns, they don't know what to think, frankly, or how to behave.
Today, I'm talking about dot bomb bubbles versus this one fully loaded with crypto and mega cap stocks that everybody owns. Don't forget, a lot of people, 80% of their portfolio, I'm not talking about Hedgeye subscribers, I'm talking about the people we play against, which thank goodness for them, 80%, 100% of their portfolio is in like Tesla and some crypto. So we started the firm, obviously, as you know, Brian, and TJ quickly remind us on this. When we made the Quad 4 crash call in 2008, what price did Steve Wynn's stock go to? Like there's some mega brands, mega American brands. Anything can go down a lot without that saying anything about the actual long term of Steve Wynn in Las Vegas. I mean, I think the stock went to 1.
Yeah, those stocks were absolutely brutalized. And you also, I think Wynn's stock, just because of how they went into the crash, their balance sheet was a little bit better, but LVS was, considered a great company. MGM too. Both of those companies were on the verge of bankruptcy. LVS, they had to, Sheldon Adelson's wife had to bail them out, and MGM just basically went begging to the banks. And the guy who put them in the crisis, because he bought back so much stock and levered up right before the crisis, ended up paying himself a lot of money because he saved the company. But you're right, they were at like, bankrupt. I mean, I remember that, like, remember Keith, I was like credit analyst for, I had to become a credit analyst to go through all of the, all of the fixed income stuff and, looking through all the documents and filings and everything else. But you're right. I mean, it can take down anything. Nobody's safe.
Coinbase, just so everybody knows on the signal, like how much smarter the signal is, Floki and the gods, the fractal gods, much smarter than Steiner and I will ever be. The signal on Coinbase was, I believe, signal was December 8th or 10th that it went bearish. And imagine what the signal knew back then. I mean, that was a long time ago, and it's certainly a much higher price ago. But I'll let you get into it. I would have never, I just saw the highlights of what this management team was saying about fully loaded with the word bankruptcy. I mean, I couldn't believe it when something stops, making lower lows in my risk range, which really is the point this morning on crypto. I have never, ever modeled something in 23 years that has the bottom of the low end of the range has fallen and crashed to lower lows over a 48-hour period, like Sol, Luna, Avalanche, all these coins. And you got to be a realist. When you start talking about, the world, everything being blockchain and no dollars and it's just stop it. Take a deep breath, learn from history. Time and space matters. The duration, the quad, all this stuff matters.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.